In this week's Robinhood breakdown, we're asking the hard question. Is this thing gearing up for a Santa rally, or did Santa check the chart and say, yeah, that's a no from me, Chief? Welcome back to Fintech Spy, where we don't just trade the volatility, we zoom in on it, overanalyze it, and then make fun of it. If you're new here, hit that subscribe button for more chaotic fintech breakdowns. Let's hop right into Hood. Quick reminder, I am not a financial advisor, this is not financial advice, and if you're making real trades based on a parody segment, you probably shouldn't be trading. On the weekly chart, Hood's glorious march straight up has turned into more of an awkward shuffle. The candles looked at the holiday season, saw everyone talking about a Santa rally, and said, we're good, thanks. The MACD has pulled back harder than a retail trader who just remembered they have rent due. That full-on Santa rally we were dreaming about? Right now, it's looking more like a Grinch grind. If we zoom out to March and April and compare that local move to now, it feels like we're maybe a little over halfway through this pullback arc. If the timing rhymes, we could see signs of a reversal starting around the week of the 6th, but how low we go on the way there is still up for debate. The 50 EMA hanging out down near 92 is basically whispering, yeah, there might still be some room to fall, sorry. On the daily chart, this hilly roller coaster has clearly hit another downhill section. The price is sliding, and the stock RSI is just copying that vibe like, same. We might be carving out a sloppy little downward channel. It doesn't line up perfectly, but it's trying its best. Kind of like a hand-drawn trend line at 2 a.m. The big problem? We snapped below the 50 EMA. So that friendly layer of support has officially left the group chat. How long does this last? That's the question of the decade. For now, the daily chart is basically sending a holiday card that says, wish you were here, but the bulls aren't. On the 4-hour chart, that midweek plateau finally found the edge of the cliff. The last 2 trading days have been a masterclass in lack of upside. If you're holding anything way up above 130, you might be staring at the screen, debating whether to DCA or just DNA. Do nothing and argue with strangers online. The MACD on this time frame is in full-on dramatic decline, like everyone decided to exit at once and didn't bother using the stairs. If past valleys are any clue, we might get a little dead cat bounce to kick off the week before drifting lower again. Translation: enjoy the green candles while they last. They may come with a side of lower lows. Looking at the December 19th options chain, the vibe is grim. Not apocalyptic, just holiday hangover grim. There isn't a ton of spicy open interest to point to one very clear level, just enough activity to hint at possible $10 swings each way as the week plays out. With Christmas vacations firing up and volume thinning out, this is exactly the kind of week where you look at your positions and think, maybe I just sell some covered calls, grab a little premium, and quietly buy a few puts down around 110, if the price is right. Again, not advice, more like a dramatic reading of what the chain feels like it's saying. For Robinhood traders, the near-term outlook looks more Grinch than Santa. The momentum to the upside is taking a holiday of its own, and we could be staring at a couple of bearish weeks while things reset into the new year. The silver lining? Volatility and chop are where active traders can reshuffle, hedge, and reposition. Or at least practice, not panic selling at the exact bottom. If you agree, disagree, or think Hood is just winding up for the next meme-fueled comeback, drop a comment and we'll spy on it next time. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech Spy microscope.